All right, mate. So yeah, I hope you're well. The white 100 moving average just appeared on a weekly. Okay, very good AVAX. I would like to buy some AVAX. Now, what am I trying to say? I've got a coin in my mind here that this reminds me of. So notice the move into this here and the rejection and the fall back below it. Um, maybe I'm wrong on this. I'll just see how good my memory is. Yeah, memories. It's not a great example, but it's still okay, right? So you can see here, just because we fall away and reject after the first attempt at above a daily moving average, a daily white 100 moving average, it doesn't mean that it's death or anything. Sometimes the rejection after white 100 moving average is very normal, and you drop back down below it, but you accumulate underneath it, and then you get the break. Okay, so that's the situation we're in right now. Now we don't know if it's going to form or hold yet. We don't know if it's going to play out yet. But if we start to base like this underneath the white 100 moving average, we have to start thinking that the daily apex is going to play out, and all these coins are going to run pretty hard, pretty fast up into the red 200 moving average. And I should say that the confirmation of that is breaking back inside the white 100 moving average after a period of time. So this is not the greatest example, but if we do, if we have any more breakdown or whatever, and consolidate down here like this, that's a great sign that price wants to come up into this area up here. The other thing that interests me is that these white 100 moving averages could actually start holding. This down a pierce. A lot of times you just pierce down below it, and you get a move back up, and you consolidate and you chop or whatever. And by doing something crappy action like this, it allows the moving averages to flatten out a little bit, and then you can get their move. Okay, so we're into an extremely interesting time. This is great. This is exactly what you want to see. The question now, the thing now that we need to figure out is, well, we need to figure out if it's going to hold. But this is essentially what you want to see. Are we getting continuation for the next leg lower, or is the market going to hold up? But the rejection in this point is exactly what you want. We are having a red week. There's 2 days left. It's having a red week. So if we do bounce, it should not be substantial. If there is a recovery, a major recovery, it's likely to be on a new week. Yes, we can bounce here because the market is beat down now. We can bounce a little bit, so we do need to be on guard on a new day and into the weekend. But there's no major recovery until a new 2 week. Don't get me wrong. There is the odd coin that will bounce. Now the other thing is we are red on the 2 week, right? You can see here there's 9 days left. This is not going to flip green, but what it's doing right now is it is potentially stop hunting this area right down here. So this is a potential buy area. If we, over the next 9 days, if we bounce and have a decent recovery from here, and say we bounce back up to the middle, well, that's a good sign. And then the next leg will probably go higher. So this will then have been a stop hunt deviation, stop hunt below the lows on a 2 week candle. So right now might actually be the exact buy point that we're looking for. But it's not easy. It's choppy, and the monthly is red here, and it's a bearish monthly stop hunt, like many of these coins. So it's there's a well, I mean, it's a bearish rejection. There's no question about it. But the question that we are trying to figure out is the bearish rejection. Is that going to start to recover again, or is this the next leg lower? We have invalidation points. This is your invalidation point. Price needs to hold essentially above this green line. Above that is a little bit bullish, and below that line is not bullish. So essentially today's lows, well, you can see here, I mean, the thing is, on a new day now, what you want to see is a move down on a new day. Creates, it's not drawing it very well, but creating a wick down to take liquidity here, and then that can be a buying opportunity if you're willing to buy that dip. If you're willing to, like, Look at this one down here. Look at this right down here. Now this came right back down to the lows, and I think it might have stop hunted, but it's a good example. Even here, you can see this large wick. There was more downside, but that downside into this wick, as you can see, obviously it was a great buy because price bounced up to here. Well, it actually bounced the whole way up to here. But and even here, this wick, we did come back down to test the lows, and we moved up again. And here we done the same. There's buyers here. There's buyers bringing that wick back up. There's buyers here bringing that wick back up. There's buyers here bringing the wick back up. There's buyers here bringing the wick back up. And every one of them presented with a buying opportunity that moved higher. But mostly there was a wick down, at least down into the 38% retrace of the wick, and then it was a decent point to buy. And even if you bought down on 30% of the wick on spot, I suppose, you were still buying down here very low. Yes, it did go down a bit lower, but eventually you would have made money. And same here, and now we have the same opportunity here. A dip down into the wick tomorrow can be a buying opportunity. You know, but the market is, we need to be careful. If it dips down and pops up and flips green like it did here, well, that's a buy right there, and put your stop below the wick. Right, that's exactly what you would like to see. Now, on a 3-day chart, these can often be very bullish structures. When you get a low-lying red 200 moving average, this down here, however long it takes, will usually eventually break up, right? And then moon. This is very good. Now, sometimes you can go lower or whatever, but it's usually very good to be accumulating in positions like this below this red 200 moving average. Now let's look at examples here. If we look back and we look at Luna, for example, you can see right here, if I can fit it all in the chart, you can see right here, you know, when these dips down here, back down, anywhere back down to the low end of the range or whatever, were good buying opportunities. And price, well, it kind of, it's not a great pattern, but it kind of did create some sort of a bullish, what do you call them? Bullish ascending triangle. I'm still trying to wake up here. But you can see that, you know, you get the distribution, you get the breakdown, you get the distribution, you get the breakdown, but you break down below the red 200, a low-lying red 200 moving average. And from the low-lying red 200 moving average, well, it was into accumulation zone. And eventually when you break, well, you break the white 100 moving average, or you break the red 200 moving average, it's off to the races. But this was accumulation, and this is also likely to be accumulation down here. Now, we don't know how long it's going to last, and we don't have a crystal ball, but it's likely to be accumulation. And then this eventually, when it's ready, AVAX should start moving back up. There's many examples of this structure. Now, this is not the greatest example. It's a daily chart, but I call the bull run in Litecoin. If you look in the accumulation channel and search for Litecoin, when Litecoin was right down in here, I called a bull run in Litecoin because because of the structure. Like if I zoom out, you can see the entire structure. We were coming down, we were rounding, we had a stop hunt, a low-lying red 200 moving average, and right in here. And I knew that any up move at all was going to get us above the red 200 moving average and above the other moving average. So when you get a low-lying moving average like this, it's easy to break out and turn bullish again. Now, this is a 3-day chart on AVAX. That takes time. But you can see down here, even if you bought on here, you know, you were buying on a low-lying red 200 moving average, and eventually it broke out. But you needed patience. But if you understand the structure and you understand the pattern and you understand it's good to accumulate in that type of pattern, well, you would have done very well. You probably could have made, I don't know, I was going to say 10x, but it's probably not 10x. Say if you bought anywhere in the middle of that mess, not saying you would have caught the top or anything, but it is a 900% move. I also remember, if you remember, I was calling a bull run on Ethereum. Of course, we'd never know it's going to go to 5,000 or whatever. But when you get the structure of the low-lying red 200 weekly moving average, right down in here, the weekly moving average, you know, that breakout there is substantial. But the AVAX is in the early stages of it. Okay, so it does imply that it's good to accumulate. It does imply that this can moon later. So you know, if you're going to buy some AVAX, you know, you just need to be prepared to add lower, right? You can see I've got alarms here. Load the boat. If we did drop down, I would like to buy some AVAX also, but you need to be prepared to continue to lower your average in case we do roll over. But eventually, this structure, because this is a flat lying red 200 moving average, and eventually it'll curl up. Even if we drop down here, whatever, I don't mean to drop to minus 20, but let's delete that. That's a very bad drawn. Let me just look at where 0 is roughly. So, you know, if we would come down and stop hunt that area, you still have to think that that'll be a buy, and you still have to think at some point this is going to come back up here and eventually move up. Now, this white 100 moving average is going to have to come down underneath price as well, so that may take time. This may not, you know, you're going to need patience. You can see here where the new year is, right? It kind of almost sets us up to have a bullish 2023. Are we going to continue to accumulate here for the rest of the year, and then coming into 2023, that is when this market is going to be bullish? But if you've had accumulated here, here, and here, ready for the move up, it should do very well. And as you pointed out here, very well pointed out, nice work on that, this white 100 moving average will also play a key factor. This will you know, continue to come down, and there will be some sort of compression at some point, and if we can break out above that and move, you know, this will be on watch now. So the worst case scenario, you can see right here the white 100 moving average on a weekly, right? What, like, the worst case scenario is that this does this, okay, and then, you know, we do come down, we stop hunting, we do something like this or whatever, and then eventually we break out. Now, why am I saying that? Well, if we go to Ethereum and we come in here, and you can see what happened. You know, so AVAX would be somewhere here, but you can see that there was another flush lower eventually, one more flush lower. But of course, if you accumulated here and accumulated lower, you were accumulating below the below the white 100 moving average, which turned into be a giant compression pressure cooker. And when you form large compressor cookers on the weekly chart, well, you can see the result, but it took time, and this is a weekly chart, and you can see that this is the worst case scenario. This is the, you know, this is the best case scenario, but it's the worst case scenario because you need patience. But the opportunity is fantastic. It's amazing, because you have low-lying moving averages like this that eventually, when it all worked out, you can see right here, and we got it back above it here, that's when it mooned. Yes, you could wait and just buy here when it starts breaking out above all of them, but if you actually look at it, right? So if you buy on the breakout here, and we take it to double top, you can see that's a 3x gain, 3.5x gain. If you had accumulated down here, well, you can see already that is an 8x gain, or, you know, this is 8 and this is 3. So they accumulating down into the dip, if you have the patience, is a way better strategy in terms of increasing your percentage gains. If you want to play it safe, then you wait and buy on the breakout here, but you will not make as much. So if we do take it to the all-time highs, you can see there that was a 14x gain, and you can see here that is double that, a 30x gain, by accumulating down on the lows.